Hi, I'm Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, April 4th. We'll start this week's report by taking a quick look at the market activity for the week. The equity market suffered a very volatile week. Both the Dow Jones Industrial Average and the S&P 500 Index were either up or down, closed either up or down 1 percentage point for every trading day of the week. An example of this volatility occurred on the last trading day of the week as the Dow Jones Industrial Average was down over 500 points in intraday trading, but ended up closing up over 200 points. The volatility was caused by a few different areas. The tech sector had a few different problems that they were facing and battling through the press. Giants in the tech sector such as Amazon, Tesla, and Facebook all had issues going on last week. And then there's also the uncertainty caused by the potential trade war with China caused by the threats of tariffs that keep going back and forth between the two countries. Let's turn our attention back now to the fund flows activity for the week. We'll start by taking a look at our fund macro groups. Equity mutual funds saw net outflows of $192 million last week. Taxable bond funds saw $276 million leave. Muni bond funds saw $273 million leave, and money market funds took in $1.9 billion in net new money for the week. We'll take a closer look at each macro group now. We'll start with our equity mutual fund group. The $192 million in net outflows that we spoke about followed the usual pattern, and that pattern is non-domestic equity funds took in net new money, and domestic equity funds saw money leave. Non-domestic had net inflows of $234 million last week. Domestic saw over $425 million leave. Breaking it down a little more granular now for each region. For non-domestic, the International Multi-Cap Value Funds peer group had net inflows of just over $170 million, while on the U.S. side of the ledger, real estate funds had net outflows of right about $180 million for the week. Let's move on now. We'll look at the equity ETF group. Big outflows here last week. They saw about $11.4 billion leave their coffers. It was the third straight week of net outflows for the group, during which time they've had almost $36 billion leave. Seems like the volatility we're seeing in the equity markets, the equity stock markets, is more reflected in equity ETFs as of late as opposed to the equity mutual funds. The largest outflows last week belong to the SPDR S&P 500 and the iShares Russell 2000 ETF, which saw $7.7 billion and $1.2 billion leave respectively. On the flip side of things, the financial select sector SPDR took in about $550 million in net new money last week. We'll move on to our taxable bond fund groups now, starting with mutual funds. As we mentioned previously, taxable bond mutual funds saw some net outflows last week, just a little bit, about $276 million left. Breaking it down a bit, a little more granular, looking at the peer groups, we see high yield funds had net outflows of about $770 million. This is an example of what we've seen in the current environment with the volatility of investors staying away from risky assets. This peer group is down almost $20 billion for the year to date. In other news, we see the inflation-protected bond funds group having net outflows of about $226 million last week. Moving on now, we'll take a look at our taxable bond ETF group. Net inflows last week for this group had about $3.8 billion in net new money come in. As we look at the table, we see that all the top net inflows were into safe haven treasury products. 3 iShares products right at the top. The iShares short-term treasury took in about $1.3 billion in net new money. The iShares 20-plus year treasury had about $735 million. And on the other side of the coin, the iShares Core U.S. Ag product had net outflows of just under $100 million. We'll move on now and take a look at our municipal debt bond fund group. They had net outflows last week as well. They saw about $273 million leave their coffers. It was the first net outflow in 5 weeks for the group. And the net outflows this week were driven by funds in the national muni categories. That's the short muni debt And the short intermediate muni debt had net outflows of roughly $160 million and $125 million respectively. Our last group to take a look at this week is money market funds. Net inflows here this week for the group took in about $1.9 billion in net new money. The main contributors were the U.S. government money market products and the institutional money market products, which had net inflows of $4.5 billion and $2.8 billion respectively. And on the sell side of the ledger, we see institutional U.S. Treasury money market funds had net outflows of $4.3 billion. Well, that'll do it for me this week. That wraps up this week's report. If you'd like to take a close look at the data for yourself, please go to our website at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.